We shift our focus to Africa, where we'll be discussing growth regions and equity opportunities within the continent. And to do this, we're joined in studio by Sven Richter, Managing Director of Frontier Markets at Renaissance Asset Management. Sven, thanks very much for your time. Looking at share prices in Africa, they're deflated at the moment right now. Are we in for an opportunity?
Well, I think we've been in for an opportunity that started really last year. I mean, last year we saw a huge deflation in share prices in Africa, especially Frontier Africa, so sub-Saharan Africa, excluding South Africa. And when we looked at the opportunities still, you know, the countries are still growing in terms of GDP. Now, GDP doesn't always equate to opportunities for companies to grow, but when we look at the better quality companies, they've grown, they're starting to show the results now, a lot of them are coming out, and we've seen really nice earnings growth. So, you know, we saw share prices come down, but we saw the companies worth more, and we think that's an opportunity.
And the Egyptian market, which the Standard Africa Fund, its biggest holding is the Egyptian market. So I think it's second biggest, yes. Egyptian, 23% of fund. I believe it's up over 30% this year in dollar terms.
It was huge, but remember it came down substantially last year. I mean, there was a number of times that it came down again and again, and then it took a huge run. It actually was up about 40% at one stage this year,
yes.
But it has come down a bit. And interestingly enough, in the last week or so, we've been seeing locals still picking up stock, but foreigners have been a little bit hesitant. You know, there's still some issues with some of the elections to go through. And I mean, for instance, one of the large brokers there has said their conference is actually going to be pushed till after the elections, when they have a huge conference in Sharm el-Sheikh every year, which is a very interesting one. So we've seen some profit taking from the internationals, but still, as you say, up about 30%.
30%.
So. Mm-hmm.
And the currency also coming back a bit.
Currency's also come back a bit. You know, and the problem with Egypt, I think, was that people were battling to see short term what the earnings were going to be, but longer term there were definitely opportunities there. It just got very, very cheap.
I want to talk about a couple of the stocks that you highlight as opportunities. Zenith Bank in Nigeria, price earnings ratio of 6 times, cheap at this stage.
Cheap, and well, price earnings ratio about 6 times, dividend yield of about 10%.
Gee.
Okay, I mean that's attractive.
And growing.
And growing, you know, and I mean when we look at what we think it's going to do over the next 3 years in terms of earnings per share growth, we're looking at sort of 20–30% a year on average for the next 3 years. But remember that Nigerian banks have come through their own turmoil. You know, sort of 2008, they had a huge issue. There had to be a rescue package put in place by the government. They had to buy some of the bad debts out of the banks. And not all Nigerian banks are created equal. You know, some of the ones that don't have the quality management in that, you still need to be wary of. But, you know, a bank like Zenith, it's just doing everything right. It's doing good earnings. It's really cheap. We think it's an opportunity, but people are still concerned about Nigeria, of course, which is why you see it in a P of 6 times.
But I'm sure, Paul, now you're going to be looking Zenith up. You're going to be looking Zenith Bank up tomorrow from an investment perspective. Dividend yield, 10%.
And growing. And currency, the Nigerian currency in the last few months?
Been relatively stable.
Stable.
Yeah. Mm-hmm.
Guinness Nigeria, staying with this Nigerian growth story and the beer story, which I know that, Paul, you like very much, don't you?
Very much.
Exactly.
So
tell us more. All ears on the desk.
I mean, Guinness has been actually an interesting one. At Guinness, there's been a lot more opportunity really to see price appreciation. You have seen a lot of foreigners stay in and be committed to it. The companies like Guinness and like the others, like for instance Nigerian Breweries, which is a Heineken subsidiary. Obviously, Guinness is a Diageo subsidiary. Those companies didn't see the turmoil that the banks went through, so they're trading a lot more expensive. You know, you're still finding dividend yields of 5 or 6%, but P's are 18, 19 times, which, I mean, it is a consumer company, so there's probably still a little bit more in it, but it's not as cheap. But there are still opportunities because obviously more people have more money in their pocket every year in Nigeria, more people are buying beer, and we think it's a huge opportunity across the spectrum in consumer goods in Nigeria with 160 million people.
Even with that 50% hike in the petrol price?
Well, you see, it's interesting because the petrol price, we think, is actually good to have that hike going through.
Oy.
Okay, because you know that some of the neighboring countries in Nigeria, okay, straight after the hike in the petrol price, had a shortage of refined product. Okay, so what was happening in Nigeria was that the government was subsidizing all this petrol. Okay. Certain individuals were collecting the subsidy and re-exporting the petrol, because all the petrol is imported because the refineries don't really work at any rate that they should work. So in the end of the day, the Nigerian government was sending all this money to the neighboring countries or into the pockets of wealthy people who put in the money offshore somewhere. So by doing this, while you see a little bit of a challenge in terms of the consumer, in terms of the petrol price, you also seen a lot more money that's going to flow back into infrastructure development in Nigeria because it frees up the government spending. So we think that as that money comes into infrastructure and pushes up the growth in the economy, the net benefit will be for the consumer and will be good for the consumer. Also, alongside the petrol price, remember they're also dealing with the electricity issues. And when they put more, and the petrol price it's a refined product that went up, or they call it the light fuel, so it was petrol, not diesel that went up, okay? And then as we see more opportunity for electricity prices to come down over the time, you're going to see also growth, but you're also going to see people spending less money on generators and electricity, so there'll be more money in people's pockets as well. So yes, there's some short-term headwinds from that, but we think as we see it going forward, we think it's very opportunistic, actually.
Moving from West Africa to East Africa, and we've got another bank in the East Africa Environment, Equity Bank in Kenya.
Equity Bank's an interesting bank. I mean, they are one of the four at the forefront, one of the leaders of starting to lend to individuals in Kenya. And I mean, that's one of our theses, is that as people are able to attract more debt in terms of individuals and invest it, we see tremendous growth coming through. You know, something like 60% of all the individual loans that Equity Banks makes, it makes to individuals who are employed. But that money is on lent by those individuals to family members to either start a small business or for education. You know, so for us, that's a huge opportunity seeing Equity Bank do that. Of course, Equity Bank, by being in the forefront of that, has built up a very strong business from basically nothing a couple of decades ago. That's also trading sort of P's about 7 times, 5% yield. And there's a lot of opportunity for growth within Equity Bank. And for people to buy beer as well.
Are there other investments in East Africa? Because there is a sentiment that Kenya specifically is oversaturated.
No, I think there's still opportunity, you know, and you have to also differentiate. I mean, a lot of people will tell you, oh, there's a drought in Kenya, there's a problem in Kenya, but you need to differentiate. Firstly, Kenya is a relatively large country. There's parts where it's a bit dry, and where it has been last year, for instance, in the north. But in the south, where some other investments, you know, there's places like, for instance, Mumaya Sugar, which is another company which we find interesting, where they have all their sugar plantations more towards the south. There's huge opportunities for people to buy more sugar, to plant more sugar. There's companies like, for instance, East African Breweries, which is on the beer side. In fact, we took a poll in our office recently, because we always take a vote as to which beer we like the most. At the moment, it's Tusker, okay, the East African Brewery one.
Really?
And we think that in the consumer is very good. We also think that Kenya, for us, is a gateway into the rest of East Africa. There's a lot more of the East African community developing. You're seeing tariffs come down, you're seeing more transport links going up, you're seeing $5 billion going into the rail link across through from the coast all the way through Nairobi and to Lake Victoria, and that will revitalize that whole link within it. That's actually a very famous rail. I don't know if there was a book about these lines that were eating people who were building a railway sort of a few decades ago. That's the railway line that actually is being revitalized now.
And the currency, the Kenyan shilling?
The Kenyan shilling, we think there can be a little bit of pressure on the Kenyan shilling going ahead.
Because it did take a knock, quite a big knock.
It did take a knock. There can be still some more pressure. The interest rates went up to sort of counter some of the inflation pressures from that. But with a relatively high oil price, we see sort of an ongoing current deficit in terms of the country, and we see that there could be some pressure on the currency there. You know, and opposed to Nigeria, of course, which is exporting oil, and we see that a high oil price is beneficial there.
We're running out of time. I keep looking at the clock there, but MTN, because this story is the South African stock with your African story in full play. You must be...
Exactly. I mean, we like MTN. We know that MTN is facing some headwinds in some of the newer markets that it's in, but when we look at its management, when we look at that it's not particularly expensive, it pays a decent dividend, and it's in all these countries where more and more people are still acquiring mobile phones. So for us, it's just a very exciting story, and continues to be.
And Paul, I think this is in along the lines of your thinking as well.
Yeah, we agree with that. I mean, obviously the Iranian thing is a bugbear.
Is it a huge issue in your book?
No, it is a concern in our book, but as you said, it's about 11% or so. I mean, so we've had a look at that. Even without that, we think there's still, without Iran in it, we think there's still valuation within the company. However, Iran is a lot of the growth and a lot of the opportunity, and it showcases their ability to work in these type of markets, which many other companies can't go into, but where this type of management can make huge profits. So